Hey folks, Rachana Ranade here and I welcome you all to one of the most requested videos, and this video is about the IPO of Lenskart Solutions Limited. Well, we are going to do this video in a little bit different style today as compared to other IPO videos. This is of course again an IPO summary video, but what I am going to do in today's video is I'm going to tell you top 10 things about this company that you must know. So out of these 10, 5 are going to be positives, 5 are going to be negatives. So if you want a holistic picture, please keep on watching the video till the end. Let's start with the very first positive. Lenskart Solution is a technology-driven eyewear company, and that's its first positive. How they are operating the company, that's their first positive. And we are going to talk about this in a little bit detail. The first positive, especially, right? Now, if I were to use the word technology-driven, it can have a lot of aspects. But just to give you two quick examples on what do they mean by technology. See, whenever they are manufacturing powered glasses, so for that a lot of precision is required. Better technology you have, better precision you will get, correct? So that's why they are saying we have good high tech technology, and that's how they are positioning themselves as a technology driven eyewear company. One more example of technology driven. So otherwise what happens is that we go to a chashme ki dukan, we try on 3 4 specs, goggles, whatever, then we check which one is looking good on me, and then we'll finalize. Instead of that, if I have something like an AR, augmented reality, and I'm just visiting their website, I can see myself. Let's say a camera is switched on, I can see myself and I check which glasses are looking, this is good, looking good on me, that is looking good on me. So that is again technology that they're using to at least hint the customers that okay, this may look good on you. After they finalize it, then they can go to the actual physical store and maybe then they can buy it. And that is why the second important point comes up is they run an omni-channel business model. So the customers can buy online as well as offline. But if you see, they have very clearly mentioned it's a D2C brand. Now what is D2C? Basically they will not have all these people in between, wholesaler, distributor, cut. Okay, so otherwise what happens in a traditional supply chain, you'll have a manufacturer say outside India, then you will have an importer, then you will have a wholesaler, then you will have a distributor, then retailer, then customer. And then of course with all these people in between, the price that a customer pays typically is on a higher side. But for Lenskart, let's take an example that the frame and lenses manufacturer is outside India. Okay, I'm not saying 100% is outside India, but yes, even today a big chunk is outside India. So you can imagine the frames are manufactured outside India, the powered glass is manufactured outside India. What happens is that then Lenskart centralized eyeglass manufacturing. So what happens in this case is that let's say there is a customer chooses a frame, okay, and based on that frame, cutting of that glass will be done and that glass will be fixed. That is what happens in this centralized eyeglasses manufacturing, and ultimately you have a customer who is going to buy it, correct? Now they are saying that we are evolving to what? Evolving to lens. Now you can see this stage is cut. So they are saying we are now saying that frames will be manufactured by us. The actual, overall lenses inside that we will manufacture, and ultimately you can imagine lenses, frame as per the requirement. Everything will be done by Lenskart. But when I listened to the interview of the promoters, they said that we are evolving to that. It's not like we are, starting next year China and other countries cut. No, it will take time. How much they have not clearly mentioned. So this is a manufacturer to consumer is what they are wanting to become. Okay, where are their manufacturing facilities? One in Gurugram, one in Bhivdi, Singapore, Dubai, but yes, comparatively on a smaller scale. If you're talking about capacity utilization, overall it is sub 50%. Okay, which brands do they have? John Jacobs, Own Days, Lenskart Air, Hustler, Hooper, Vincent Chase, those who have been purchasing from Lenskart, I'm sure you already know these brands. And what I have seen is, majority names are like Firang names. So, even today we have that mentality. John Jacobs. And instead of that, had it been a normal Desi name, people would have said, I'm not sure how the quality is. Huh? So, very nicely positioned, I may say that. And I'll be really honest. I mean, I asked few of my friends, my colleagues, if anyone uses Lenskart frames and glasses, those who have bought from Lenskart, they are very happy with it. Overall customer service also, overall designs, everyone is happy with those. I mean, those who have bought from Lenskart. I'll be honest, I have never tried Lenskart. Piyush ji, if you're watching this video, I've never tried Lenskart. Just FYI, okay. Anyway, just kidding. The transaction value is between 2,000 to 10,000. Less than 2,000 is so transaction value 2,000 to 10,000 is their majority chunk. Sales transaction value 63% comes from this space. Below 2,000 18%, above 10,000 roughly again 18%. Now overall trust that they have built technology driven company, trust they have definitely built a good brand, and that reflects in numbers. Overall customer accounts have increased from 7.7 millions to 12.4 millions, from 15.95 eyewear sold to 27.2 million eyewear sold. Even if I'm talking about total stores, from 1900 plus stores to 2700 stores plus, it has gone almost doubled, almost 1.7 to 2x in from 2023 to 2025. So all in all, I hope the first positive is clear. They have definitely built a good business, a good brand. Now, first positive took a lot of time because we went into absolute details with what does the company do and few more aspects of why it's a technology driven company and all that. Now, positive 2, 3, 4, 5 are comparatively easier, smaller, so we will be able to go at a much faster pace, right? Second positive is that they have a very good geographical diversification. Now, if you check here, from financial years 23 to 25, their India revenue is almost at 60 percentage, and the same continues for Q1 of FY26, again roughly 60% plus, shade higher than that. And for international, it is around 40%. Okay, so a good split of 60-40, with 60% roughly at India, 40% roughly international customers. Third positive is that they are saying that if they were to compare their revenue with their competitors' revenue, their revenue, Indian revenue only, it's way higher as compared to them. How? Now, for that, they have, I'm just going to, this is the screenshot that you can see from the RHP. So, first things first, we have to understand that this whole space of eyewear, it's majorly in the space of unorganized sector. I think whatever I remember reading from the RHP, I think 60-70% market share is with unorganized sector. Whatever 30-40% is there with the organized sector. Who are their prime competitors? Eyewear retailers such as Eyewear Optics India Private Limited, Gangar, I'm sure you might have heard this name. Even Lawrence and Mayo, you might have heard of. Reliance Vision Express, Specs Makers, Titan Company, only eye care division. All these are their competitors. Now, this line is again extremely important. What does this say? Revenue from operations of these companies, the companies that I refer to right now, in financial year 25 was at least 65% lower than the India revenue of operations of Lenskart. So there is a big gap of the revenue if I'm comparing Lenskart with their competitors. So again, definitely a positive point that they have proven themselves in this entire space, right? If I'm talking about positive number 4, this is about their increasing EBITDA margins. Now, if you see, EBITDA margins have improved from 6.86% to 14.6%. One of the reason, of course, their revenue numbers are increasing, agreed. But I think here operating leverage is also kicking in, and more and more growth they are able to actually capture. Higher growth will actually improve their EBITDA. Plus, with operating leverage kicking in, I'm sure it could be a good one for them in the coming few years as well, if growth keeps on continuing. Okay, but are they growing at a faster rate or not? For that, we'll have to move on to positive number 5. And if you see here, the overall industry is expected to grow at the rate of 13% CAGR till 2030. But if I'm checking current CAGR last, so from 23 to 25, revenue CAGR is already 33.58%. So anyways, they are beating the industry growth almost by more than 2x. And if they're able to continue or go at a faster pace, actually, I'm sure they may do a way better job, right? So all in all, I hope you have understood about all the positives. Now come the important ones, which are the negatives. We're going to cover that in the next section of the video. Now let's come to the important part of the video, negatives. The very first negative is question mark on the profitability of the company. Now, if you see here, restated profit and loss for the period, you can see here the company, this is rupees in crores I'm translating into. 63 crores of loss till 2023, 10 crores of loss till 2024. Come 2025, 297 crores profit. How's that? And whenever it happens that company just turns profitable and the IPO comes in the same year, of course eyebrows are raised, and people try to check whether this, if it is a normal profit, which is like a profit which has come from hardcore operations, some turnaround, something different has happened, they have changed a strategy which clicked, and because of which this will be like a recurring thing, then of course investors are happy. But if this profit majorly is driven by something like an other income, investors are not happy with that, and that's exactly what has happened here. If you see your other income, it has almost doubled from 182 crores, it has shot up to 356 crores. Now, what was this big jump all about? If you want to know it into detail, you can see here that will be given in note number 23. So when I went to note number 23, I've just given you the relevant screenshot. Here you can see FVTPL gain on deferred consideration, and that itself accounts for 167 crores. Big one, correct? Now, what is this FVTPL? Full form is fair value through profit and loss. Okay. Now, for those who want to just understand it in the most simplest way, what is fair value through profit and loss? This other income, this is a part of other income, right? Now, other income can be of two types. One, where you are actually receiving cash. Okay. Let's say if I'm talking about a manufacturing company, they sold scrap. Okay, bhangar, they sold scrap and they got money. That is actual money they have received. That's let's say their other income. Okay, or let's say they have got interest on fixed deposits. Actual money has been received. But second type of other income could be like an accounting entry, which is a non-cash item. Okay, it's just an entry which is passed and income increases. Which type of number is this? Fair value through profit and loss. This is the second one. Okay, so neither money has been received as such, it's just a fair value entry that has been passed. Number two, this is not like a recurring thing na. Every year it's not coming from hardcore operations. So as an investor, am I happy with this? Not really, because I mean, this is not something which has changed the operations and which will result into sustained profitability of the company. Now, for those who want to know a little bit more into detail, if you want, you can check this next 1 minute. Otherwise, you can skip. It's up to you. What is this fair value through profit and loss? Just to know a little bit more on that. In 2022, company acquired a Japanese eyewear brand which is called as Ondays. Okay, and what happens is that whenever you buy a company, two types of considerations could be given. One is like an upfront consideration, one is like a deferred consideration. Now, what happens with this deferred consideration is that there could be certain terms and conditions. Let's say the brand is performing really nicely, and that is the reason why the company will have to pay more than what was decided. And if the brand is not performing as they had expected, company may have to pay less than what was expected. Okay. Now, if they have to pay a shade lesser, okay, is that going to be a gain for them? Yes, but that is not an actual money received, and that is just still a fair valuation which has been done. Okay, so this is an absolute accounting entry. So major profit that the company, so if someone is just reading the headlines, company has turned profitable, not a sustained profitability as per this one. So I hope the first big negative is absolutely clear. Now let's move on to the second negative, and which has been talked about a lot, which is valuation of the company. At the upper price band, the valuation comes to 70,000 crores at a revenue of around 6,500 crore roughly, PAT of roughly 300 crore, out of which 160 crore, if you remember, was that other income item, which was again a non-cash item. Now with this, the price to sale comes to at 10.48, price to earning comes to roughly 230. These are definitely at a much higher valuations, right? Now many people are saying that if I'm talking about new age tech companies, be it something like a Nika or something like Zomato, they claim high P ratios. Look at what happened to these companies post listing. Now whenever many people again would say chalo, eternal Zomato, what happened after that? There was a nice turnaround, company stock prices are way higher right now. But I personally feel that Zomato turnaround majorly happened because of Blinkit. There was the whole new thing came in, which is the quick commerce thing. There is nothing like quick commerce or no big revolution happening in this eyewear space right now. It may happen in the future, but right now it's not happening. So definitely at where they are right now, these valuations look steep at 230 PE. Even if you were even if you were to look at a store wise valuation, the valuation multiple is of course going to remain the same, but just to give you some perspective, total number of stores 2723, revenue per store would come around 2.5 crore. So per store would generate around 2.5 crore revenue and a PAT of roughly 11 lakhs. So with a two and a with a 25 with a 2.5 crore ka revenue, valuation per store comes to 25 crores. So again, the 10 PE multiple basically, or price to sales multiple, sorry. So that definitely looks on a steeper side, and questions are being raised about how much value would be really left for the retail individual investors. All right, now let's move on with the negatives. Now negative number 3, 4, 5 are comparatively easier, smaller. In fact, 4 and 5 can be questioned whether it's really a negative or not. Let's first move on with the third negative, and here you can see there is a lot of dependence on purchases. Imports basically are happening from PRC. PRC? People's Republic of China. And if you see here, for the financial year 25 year ending, 42.2% of the total imports were from China. They are saying that yes, we are importing some of our raw material, including import of frames directly through Baofeng Frame Cart Technologies Limited, of course China based, and that is their joint venture. So main point is that if some geopolitical relation between India and China were to go for a toss, if some shipments from China are stopped, whatever, there'll be a big question mark on their purchase, on their imports, on their purchases, which can ultimately impact their top line or their sales. Okay. Negative number 4, as I said, you can definitely say whether it's maybe it can be questioned. It may not be a negative. I may say it's like a fun fact, but what it is. Now, if you see here, it is very clearly mentioned that in the last 1 year, who all have purchased the shares of this company and at what price. Some figures may be hidden because of me, but here I'm going to mainly talk about promoters who bought shares. Piyush Bansal, Neha Bansal, Amit Chaudhary, Sumit Kapai, all these are promoters. How many shares have they bought? This list is given. For example, Piyush ji has purchased 10 crores 46 lakhs 99,010 shares at a weighted average price of 30 rupees, and the upper price band of this IPO is 402 rupees. So a lot of retail individual investors, especially, they, I mean, we do understand that of course promoters have put in their sweat and blood for so many years, but had they bought it like 3-4 years ago, we may say that so many things have changed. But as a retail individual investor, there is definitely a question which arises that last year you are buying at 30 rupees and this year you're going to sell it at 402, because all these people are also selling you on the next slide. I have given the names of selling shareholders and same selling shareholders, right? So some question marks are raised. So that's why I said, whether it's a negative point, whether it's a fun fact, or whatever you call it, I just wanted to share this information with you all. So even if I say the promoters Piyush Bansal and Neha Bansal, if I were to calculate a weighted average price, and if I were to check the selling price, the gain in 1 year would be around 1484%, right? So okay, that was point number 4. Coming to point number 5, again not a big negative per se. Out of the total money, 7,278 crores, majority 5,000 crores plus is an OFS. Basically promoters are exiting, some investors are exiting. 2,000 crores, whatever, 2,150 crores, whatever is a fresh issue. It's not like a lot of money is being, I mean, majority of the money is going to be invested in tech and expansion. I mean, of course, tech or some high fundu things, they are going to open stores, but I have also shared the stores valuation metrics with you. So I mean, if I always love if it's like 100% a fresh issue, or at least 80-90% fresh issue. It's not like that. Majority is an offer for sale. So again, a question mark here, right? So I hope all in all you have understood 5 positives, 5 negatives. I've tried to give you an overall summary of 1,100 plus pages RHP. I think this was one of the biggest RHPs that I've seen till date. Some people are saying this is also a negative. Why such a big RHP? Okay, anyways. So all in all, I hope you have understood the overall summary of this IPO. Do let me know in the comment section whether you plan to invest in this IPO or not. And if you did find value in today's video, don't forget to smash the like button. I'll see you in the next one. Till then, take care. Jai Hind and bye-bye. You might have come across such advertisements on various social media platforms. Please note, all of these are fraudsters promising unbelievable returns through stock tips. I don't provide any calls or advisory services. I provide only educational content through my social media handles and through my website rachanaranade.com and rachanaranade.in.